Hi and welcome to Westpac London's end of day for Wednesday the 3rd of August. And it's another down day, I'm afraid. US stock markets, for example, down for the 9th day running. European markets down very sharply today too. Main concerns have been the ongoing realisation that the US economy is not going to be performing particularly well over the next year or so. In fact, we've had one very well-respected economist, Martin Feldstein, suggest that there's probably a 50% chance that the US economy could indeed be back in recession now. Some of the data that we had on the US today wasn't particularly good. We saw, related to the labour market, a 59% rise compared to a year ago in corporate layoff announcements. And the Services ISM survey, which is a measure of how services sector businesses are doing, included in its weakest result for over a year a very soft jobs component. It fell a couple of points. We did also have a private sector measure of employment for the month of July from ADP. Came in a bit stronger than expected, up 114,000, but that's still the second weakest outcome so far this year. And if you look at it on a 3-month basis, over the last 3 months, ADP private payrolls has averaged a gain of about 100,000 compared to an average of 200,000 per month in the previous 3 months, that's February, March, April. So on every measure, the labour market has clearly softened in the US on that data today. The other factor pushing down stock markets has been ongoing concern about the European sovereign debt space. We've got, as I speak right now, it's about just coming up to 5 o'clock in London, we've got Italian Prime Minister Silvio Berlusconi talking to the Italian Parliament about how ridiculous it is that Italian bank stocks have fallen 25% in the last month. Well, we'll just wait and see on that one. Okay, in terms of other markets today, just to give you some numbers, on the stock market we've got the Dow, as I speak, down 0.2%. It's 11,791. FTSE's down 2.25% today. The DAX is down 2.3%. The French market down 1.9%. And losses of similar magnitudes in other continental markets. In the commodity space, we've seen a similar story as we saw yesterday. That is, gold prices are up on safe haven buying. Copper, oil down. Oil's down around 1.5% today, $92.38 a barrel, with an extra factor there being inventory figures for the US, which showed a bit of a run-up in oil stocks, putting further pressure downward on the price. One of the other victims of the weakness in equity markets and the increase in risk aversion today has been the Aussie dollar, down another cent to 1.07 against the US dollar. Remember, it was at 1.10 just at the beginning of this week. Other things to mention, the Swiss National Bank cut interest rates today, 0.25%, their first move in a couple of years. They cut them 0.25% to 0 to try and curb strength in the Swiss franc. And that's actually interesting, given that we've got the Bank of England and European Central Bank meetings to watch for tomorrow. The ECB meeting in particular is going to be great to watch. I mean, we know we won't get any change in interest rates, but Trichet, in one of his last press conferences as ECB chief, he steps down in October, will be grilled very heavily by the press on the European sovereign debt issue, which has clearly become a real problem again after just a couple of weeks of hiatus when the focus has temporarily shifted to the US. But it's firmly back in Europe now with Spain and Italy the big concerns. If those guys were to need bailouts, there simply wouldn't be the funds to do it, and it would just precipitate the need for a significant debt restructure or default by one or more countries. Anyway, more on that when I speak to you tomorrow. And watch out for my zooming in face, because I've got to turn this off by myself.